Buddy, this is Brett. I want to do a quick video just showing this study that I've just revised. I published this a few times here. It's got some new information here, and this just shows that this is the potential path to Bitcoin 155,000 here in 2024. Near term, potentially 100,000 by the halving, and we're going to be looking at this similar pattern that played out in the last cycle. So, although these numbers seem high, it certainly is possible, and even a 210,000 cycle high that could come earlier in 2025, potentially even end of 2024. I'd like you to think about all of these 10 items as small, smoldering campfires. And if any one of them ignite, like a good old fashioned California forest fire, they can go up in a blaze. And so we've seen that happening already, of course, with the BlackRock and Fidelity ETFs finally flowing into Bitcoin. We can see that on the BlackRock IBIT. It sold off hard on the opening, pushed up, nice cup and handle pattern. So strong buying coming up out of this. And this is some proprietary indicators we have showing a strong buying. So we are looking for that to continue. But going through the rest of these, the ETFs, a lot of the other ETFs haven't started selling it yet. So that should continue to put buying pressure on Bitcoin and the spot markets throughout the rest of the year and ongoing. The second item that could help push the price up and ignite the other factors here would be the QE money printing to start paying down the U.S. debt. If you haven't looked at usdebtclock.org, it's a scary live real-time look at how fast the debt is increasing. And so they're going to have to drop interest rates at some point to even pay for our own debt. And that is going to lead to quantitative easing. And as we know, that leads to risk on asset prices like Bitcoin, like tech stocks going much higher. So the next factor is the bank term funding program, which the Fed came in and did after COVID and all the bank failures that happened last year, rather, that we saw with Silicon Valley Bank and some of the other ones. That so they basically it was a type of quantitative easing where the Fed was loaning money to the banks, which were then loaning it out themselves and putting more liquidity into the marketplace. So they extended that. It was originally $600 million. They added another $600 million. And so that is coming to an end March 11th. Janet Yellen has already signaled that they will not renew that. And there are banks, already banks that are indicating they are showing large losses, mostly commercial real estate losses. And so what's happening in China right now with their real estate market crumbling, their commercial real estate market crumbling, they're starting to pump massive amounts of money into their economy. It's only a matter of time before that happens here, and likely we'll see some bank failures. There's a bank out of New York that just they're showing a $200 million negative balance on their books, whereas last year was positive. They're likely going to go under. In the end, that is going to probably push more money into safer assets, risk, favorable assets, and a flight to quality like Bitcoin. But also, it probably will lead to the dropping of interest rates. If we start seeing bank failures, the Fed will typically raise rates, come in until they break something, and then they come in and start to drop rates. So that should be good for crypto, especially Bitcoin. The next one is the de-dollarization and the hyperinflation of the US dollar. We've been hearing about the BRICS nations for some time, but it's another, again, it's a smoldering campfire. It's there. It's still on fire. It just hasn't flamed yet. BRICS stands for Brazil, Russia, India, China, and South Africa. They are moving away from buying their energy in US dollars, which means less demand for dollars, more supply, and that leads towards inflation. So that is still very much on the radar. Their GDP collectively of the BRICS nations has surpassed that of the NATO Asian nations and the other countries that normally using the dollar. So that is happening. A very interesting video to watch on Netflix is Ray Dalio's Changing World Order, where he talks about that and potentially inevitably losing the dollar as a world reserve currency. So we'll have to see what happens. The other factor here, number 5, corporate accumulation. We've got MicroStrategy and Michael Saylor buying Bitcoin, continuing to buy Bitcoin. He just bought another 86 million in Bitcoin, and he's floating a $750 million common stock offering through MicroStrategy to buy more Bitcoin. Their business model is entirely around that, and they really have become more of a surrogate of like an ETF. So a surrogate of owning Bitcoin by buying MicroStrategy. So I think more companies, they will start to adopt that. His big argument, as the dollars on their balance sheet were losing 15% per year in inflation. And so the only way to survive is to put their balance sheets assets into Bitcoin. So that is what they're doing. And at one point, he talked Elon Musk into doing the same with Tesla. So it's only a matter of time before big companies like Apple, Tesla, Microsoft start also buying more. We also have country adoption of Bitcoin as a reserve currency. El Salvador is now in profit on their Bitcoin, and there's a number of other countries in financial trouble with their currencies. So likely we'll see more of these, and then it becomes more like the old game, the uh, musical chairs, right? Where so nobody wants to be last, so other countries will start adopting Bitcoin as well. Number seven, post having reduced Bitcoin miner selling. Basically, the miners currently are selling $12 billion a year in Bitcoin. After the halving, only half as much will be available, and so what that means is that'll drop 6 billion in sales pressure for that from that happening. The miners having to sell to pay for their energy costs, their mining rigs, which are very expensive, and so that will reduce the surge there. And that's something Michael Saylor pointed out recently. Also, number eight, less available exchange supply, causing a demand surge. A lot of Bitcoin is leaving exchanges. Whales are actively buying. We've seen a lot of buying recently with whales owning 1,000 or more Bitcoin, and because they see what's coming and moving it off of exchanges so that it's no longer available. And obviously, more demand, less supply can create a demand surge and a supply shock. So we likely could see that. And again, any one of these will exacerbate and ignite the other ones potentially. And so as we go down to political support in favor of Bitcoin and crypto, Cynthia Loomis, Senator Loomis, has been using the methane and the methane from oil refining to burn to power the Bitcoin mining. So it's no longer a valid argument that Bitcoin is bad for the environment. If they burn off the side products of oil refining, use that energy to mine Bitcoin, then it's a zero footprint. It's energy neutral footprint. So there's going to see more of that, and politicians coming in. We'll see Vivek is very pro Bitcoin, and Robert F. Kennedy is as well. So it's only a matter of time before the public really is wanting to see our public voice representing crypto. So that's only a matter of time as well. Number 10 is the bursting of the global sovereign fiat debt bubble. We printed globally $35 trillion in liquidity during COVID that is still in the system, and so that has not gone away. And so, good chance of seeing some world governments really having to face the music here and either print more money or change of regime. What do you think they're going to do? They're going to print more money. And at some point, that could be problematic for the fiat currencies worldwide. And again, as we recently saw Larry Fink talking about the chairman of BlackRock, a flight to quality into things like Bitcoin. So I'll just talk about the charts here, and then I'll talk about the 4 or 5 negative factors here. If we look at the charts from the last cycle, from the cycle high down to the low, this is a basic Fibonacci projection, and there's a number of ways to draw these. But if we look at the 618 retracement, that's where it pushed up to and rejected for a while. It did sell off quite a bit into the COVID crash. I'm not looking at that. What I'm looking at is this red window here, where we saw a rapid rise in Bitcoin prices. And this blue line over here in the current cycle is this exact pattern. You just stretched out a little bit. So if we overlay that, I think it will play out a little bit slower this time because this was post halving, and we can put an indicator on showing when the halvings do happen. But if I overlay this onto this, it's dragging out a little bit, but the prices do overlay very closely. So I'll come back to this. And by the halving, this would indicate 100,000. We could push up to 100k by right around that halving cycle, the way I had it drawn right around April. I think this is more likely March, April. We see a pullback at 100k, and then we rally strongly up to these higher levels, ultimately to 155,000. The reason for that is these Fibonacci levels here, the 1.618, 2.618, and the 3.618 were all key levels in the prior cycle as well, with the market cycle high coming in right at the 3.618 level. So that's where I'm getting the $210,000 level up here. So basically, I think this year we push up to this 2.618 level here, and we hit that 155k level, and then probably like a blow off top. If we do get a blow off top, could happen end of this year, and then that would be it. More than likely, though, we see a deeper pullback, and then next year, sometime in 2025, we see that push up to the 210k level, and then that's the top. If history will repeat itself, and these tend to be pretty similar. This doesn't mean it's going to be exact, but this is my best guess here going forward. The negative factors for lower cycle highs in 2024 would be we're in the first ever global macro recession for Bitcoin. We don't know how that's going to react. Maybe that becomes a bullish factor. We just don't know. It's an uncertainty, and markets, as we know, do not like uncertainty. Number two, spot ETFs mark the near-term market top, as we've seen in the past. These ETFs sometimes do mark market cycle tops. We have since validated that after the sell-off over here. But what this refers to is if we go back in time, the market cycle top over here was when the futures ETF was released, and then the Coinbase IPO. Those both marked areas where it pulled back strongly. I don't think it's the case this time. Reasons we won't get into. Yeah, Bitcoin futures are cash settled, not crypto settled. So that did not equate to higher prices. That didn't mean they were going to buy more Bitcoin in the spot market. Whereas over here with the spot ETF, that is exactly what it means. So, number four, escalation of internal war fears. If there's a bigger war that we get dragged into, or some other catastrophe, just never know with these things. Another pandemic. These are all things that could cause a short-term pullback, but as we can see on this longer-term trend line, and during the COVID crash wasn't an excellent time to buy. So this trend line here, if we were for any reason to pull down to that would be an ideal place to be buying and strong support. I don't see that happening in the near term or at all. So it just depends on how this pattern starts to play out. I could draw it this way too, which does take us up to the 210,000 and these other levels. So this is a bit of a moving target, but these kind of patterns do tend to repeat over time. Number five is if they don't start money printing, which I can't see that happening. We either have to start printing money, as China is doing, or basically say, hey guys, we tried the United States Republic, didn't work out, we're going to go in another direction. Nobody thinks that will happen. Certainly they'll continue to ease and reduce interest rates, keep the economy strong going into this election cycle. They always do. So anyway, those are my thoughts on that. I would love any comments, counterpoints down below. Either way, we're looking really strong here and looking good. I do expect a pullback here from the $50,000 level, which we can see I've had this trend channel on there for some time. And this is a clearer chart here. We saw this kind of bearish divergence happening here, hit that golden pocket retracement, rejected here. We barely touched on it. So I'm not surprised we're back up into this 50K region. These round numbers tend to face resistance and pulling back a bit. Here's another look at it. This red box here are buy or sell, strong sell orders. So there's a lot of sell pressure up here, a lot of buy pressure all the way down here. But my revised version is I don't think we go back. I don't know that we go down to 38K. Originally, I thought we would and stretch this out. I think this is a quicker retracement to support here at 45K. And then we push up. We need to see prices close strongly above 50K, even 52K. That maybe happens over the next few weeks. And then maybe break up and we take out up to 60K into the having that scenario one that if things are orderly and we don't see that parabolic rise, but it remains to be seen. So everybody, hope you enjoyed this. If you did, feel free to share and like the video down below, and love to hear your comments. Thanks.